Hey everyone, welcome back to Corporate Decoder. Get ready because today we are diving into a report from Texas Pacific Land Corporation, and let's just say after seeing these numbers, you might want to buy a cowboy hat and some land in Texas. Alright, we are looking at their recent announcement about how they did in the last 3 months of the year and the entire year. Basically, it's a report card on their financial health, and we are going to break it down to see if they aced the test or need to go back for summer school. To add to that, they also put out a presentation for investors and analysts. Think of it as the company trying to sell you on why they are doing great or how they are planning to do great. We will see if the presentation matches up with the actual numbers. A video from the CEO is included, so the company is really trying to show investors what they have planned. Let's get right to the main thing, their financial results. This is the meat and potatoes, where we see how much money they made, what their expenses were, and if they are making more money than they are spending. Are they profitable or burning through cash? We will find out. Texas Pacific Land Corporation, or TPL as I'll refer to them, basically said, hey, check out our press release. It has all the details about how much money we made this past year. So instead of telling us directly in this report, they are pointing us to a separate announcement. Smart move to highlight the good stuff if it is good, or bury the bad if it is bad. The company also posted an investor presentation on their website. This is important because it means they are sharing information with everyone at the same time. They don't want some investors to have an advantage over others. This is a very good practice from the company's side. The company provided a press release detailing the company's financial results for the last 3 months and the entire year, comparing them to 23. This will allow us to see if they are improving, declining, or staying about the same. Very interesting. They also posted an updated investor presentation on their website. These presentations are made to impress investors with how great a company is doing. We need to check if it is truly the case here. The company is saying this information in this report, and the exhibits is not officially filed for legal purposes unless they specifically say so in another filing. It's like saying this is just for your information, but don't hold us to it in court. The most important part of this report is the list of exhibits. These are the actual documents with the financial statements and other important information. Without these, we are just reading someone's opinion, not the facts. Exhibit 99.1 is the press release with their financial results for the year. This is what we are looking for, the actual numbers. We'll dig into this to see how the company performed. Exhibit 99.2 is the investor presentation. This is where the company tries to put its best foot forward and convince investors that they are worth investing. We'll check if it backs up the financial results or if it's just smoke and mirrors. Now let's take a step back and look at the big picture. TPL basically owns a ton of land in Texas, specifically in the Permian Basin, which is a major oil producing area. Their main business is leasing that land to oil and gas companies and collecting royalties. So their success depends on how much oil and gas is being produced on their land. Looking at TPL's direction, a few things stand out. Their biggest strength is their massive land holdings in a prime oil-producing region. As long as oil and gas companies keep drilling, TPL will keep making money. However, that's also their biggest weakness. They are heavily dependent on the energy industry, which is known for its ups and downs. If oil prices crash or drilling activity slows down, TPL's revenue could take a big hit. One notable risk is the increasing pressure to move away from fossil fuels. As the world shifts towards renewable energy, demand for oil and gas could decline, which would hurt TPL. On the other hand, a major opportunity for TPL is to diversify their business. They could invest in renewable energy projects on their land or find other ways to generate income besides oil and gas. Now for the stock price outlook, TPL's stock is already quite expensive. We need to look at metrics like price to earnings ratio or PC ratio, which compares the company's stock price to its earnings per share, and price to cash flow, which compares the company's stock price to the amount of cash it generates. But even with strong earnings, the stock price may already reflect a lot of future growth. Based on current valuations and future growth prospects, a reasonable target price range for TPL would be between $1,300 and $1,400. In conclusion, while TPL is a solid company with valuable assets, their dependence on the volatile energy industry and high stock price give me a neutral, leaning slightly bearish outlook. The company is good, but it might not be the best time to buy based on the current prices. Thanks for watching. If you found this breakdown helpful, please subscribe, like, and comment below. Let me know what company you want me to decode next.